Hello again, everyone. It's Vince Forer from TradingWinds.com, and this is our update for November 8th, 2020. Hope everyone's having a great weekend so far. Well, we have a winner. It finally was declared early on Saturday that Joe Biden won the election. So, good thing in a way that it happened on the weekend while the markets and the futures were closed. We'll probably get a much calmer response coming out of this, but we'll have to wait until later this evening when the futures open to really see any impact there. But let's have a look at how things finished off on Friday. The Dow did finish slightly lower, down 66 points on Friday, while the S&P 500 actually was pretty much flat, down one single point on Friday. The NASDAQ, also again, a very quiet day overall for the NASDAQ, finishing higher by just 4 points. It was lower earlier in the session, but did bounce and made that back. The Russell, however, had a bit of a tougher day. It was down almost 16 points on the day. If we look at crude oil futures, they were up about 35 cents or so on Friday. Again, we'll have to see what the impact is this evening. And gold, let's have a look at gold. Here it is. Ended up pretty much flat as well, down just 20 cents or so. And the dollar index, let's have a look at the dollar index here. Bit of a sell-off. And this is important because we are very close to tripping these lows. We're back really in that range of the lows. Let me just draw a line here. If we try to connect as many previous lows as possible, that's it. We've already broken that. Now, the absolute low was here on the 1st of September. The low came in at 91.74. So really, until we break that, we're technically holding this range. But you can see that if we try to connect as many of those lows as possible, that's the line, and we did bust through there on Friday. So not a good look for the dollar index. Let's take a bit of a broader look at the ETFs for the different sectors. And if we start with the materials ETF, you can see we've got a nice pop here and a breakout to the highs. So that looks good for a continuation of that move higher. The communications sector, same thing. Now, we haven't breached the all-time high here, but we did breach the recent high here in this recent range. So that looks good as well for a move to the upside. Energy, however, looking more and more like a short here. I think eventually we will come back to that 22. It has just been a slow, steady decline, and that should continue. Their financials bouncing a little, although we have not moved above a previous high yet. So technically still in that consolidation mode here. Still range bound. We need to take out a high. Could happen as early as tomorrow, I guess. Industrials, similar to financials, we have not moved above a high. So technically we're still range bound, but certainly looking a lot more like we will break those highs. The XLK, the technology ETF, similar. We have not taken out a high, but well above that 20 again, and certainly getting a lot closer. If we breach this high here, when was it here? October 13th, just above 124. This will technically be a double bottom here, and we may see another move to all-time highs there. Consumer staples, again, range bound. A lot of these charts look similar. We have to wait for a high to be taken out, but certainly, barring a very negative reaction to yesterday's results, we should see another leg higher here soon. Real estate ETF, completely range bound. Not much happening there at all. Utilities, here again, looking like it wants to run, and we're very, very close to those previous highs as well. Healthcare ETF did break the high, so that looks like we've got another run to the upside started, and consumer discretionaries range bound, but again, moving towards those highs. So we certainly see a very common theme here where it can still go either way. Most of these charts are range bound. Most sectors are range bound, but certainly most of them looking a lot more bullish than bearish at this point. If we look ahead this week, as far as news coming up, a fairly light week. On Monday, we really don't have anything of significance. On Tuesday, we get the Red Book report and the JOLTS jobs opening report for September. Wednesday, we get NBA mortgage apps number. That's pretty much it. And then Thursday, we get jobless claims along with core CPI and crude oil inventories. We also get the federal budget balance on Thursday. And then Friday, we get core PPI. And we get consumer sentiment and the U.S. Baker Hughes rig count. So not a huge week there for news. We obviously have earnings season ongoing, so keep an eye out there. Always look for that next earnings date on any position you hold, so you don't get caught by surprise. But really, this coming week, and really it's tomorrow, that we have to keep an eye out for is the reaction to the election result, which was finalized yesterday. So keep an eye on those futures tonight. They open up at 6 p.m. Eastern. Let's see what those equity futures tell us. I'm assuming they will move higher, but not necessarily. Remember that reaction last week when Biden was winning, and the thought was, well, he's gonna reverse those tax cuts, which are not good for the stocks that got us here in the first place. So we may see some downside. So anyway, keep an eye on the futures this evening and into tomorrow, because a lot can change. Even if you see a big reaction early on, a lot of the wind might come out of the sails by opening tomorrow. So keep an eye on that, and we will be back with another live market chat tomorrow afternoon at 1 p.m. Eastern, and we can see how that first morning of trading after the election has gone, and certainly hopefully have a much better idea of where things are going from here. Okay, so that's about it for now. I hope to see you at tomorrow's chat. But that's about it. Enjoy the rest of your weekend, and we'll see you on our next update.